Let me share my screen. All right. Good morning, everyone. Happy Monday. One of the last few of these we'll be doing this year. I think next week is the last one for 2022. As always, we're going to do a big picture outlook. We'll go over some top ideas, and then we'll go over any member ideas that you guys have. So, big thing here, really, again, Sheikh was discussing these kind of rising wedge breakdowns that we've seen all year. And we've basically seen new lows every time that this pattern has broken. Every time we hit a new low. And it just looks like this, same kind of Groundhog Day environment where it's the same pattern is breaking. And do we see a new low? And that's kind of the question right now. Or does this pattern do something different for the fourth time and doesn't put in a new low, starts to range out? That's kind of the question to be seen. And I'm kind of in a toss up on both. It can kind of go either way. So I'm not really trying to anticipate much, just trying to be very light up here. Again, a lot of the sectors, we've seen just very clear, just very straightforward technical analysis stuff, retest holding, stocks breaking very steep uptrends and resetting. Even this, I drew this a few weeks ago to kind of, visually show, when the market looks beautiful, it can fade just as quickly, and industrials are literally staying inside the circle and I had no intention of that. And it's still literally in this same little channel. So we're just seeing kind of broad profit taking into these major retests. The 10-year has come in a little bit. It's finally, getting a little bit of a bounce here, but everything, all these sectors are just basically resetting. The only ones really that haven't broken out or had any real move were these discretionaries, which as much as I thought this base was going to break higher, and now that we're kind of rolling back over into support and it hasn't bounced, we're probably going to see a decent flux lower. And it's probably one of the first ones to really go as the market continues to pull in. Biotech's really the only sector kind of holding up here near resistance, where everything else is kind of a broken record, just very steep uptrends that are breaking, testing support. The pain trade is now starting. This is the more difficult environment that we don't really want to be trading in, even for utilities. Just to give like visual examples, this is what I say, like the easy times, and this is the pain trade. And this is often the time where you miss this easy time, you miss the easy breakout, you miss the support buybacks, the market starts to come back into these price points that you missed initially. And that's where the trades become much harder. And even if we look at something from a few weeks ago, like this monster, we took it that first time up through 100, but trying to trade it on the way back down into 100, that's a much more painful, much more difficult trade. The things that we want to try to avoid as much as we can, because these are the times where you take those little shots, those little, low risk trades that you kind of just get burned out in. And we've seen it this whole year. These crappy times, they all are about the same. They're all about, a month from, the start to finish. So we're about a week in. Again, this is a holiday week. It's the end of the year, beginning of the new year. A lot of people right now are going to be sitting in the living room. Again, soccer's done, but they're going to be watching Christmas movies. You're going to be, out visiting family. This isn't going to. You shouldn't expect this next few weeks to be, or going into the new year, anything dramatic. Again, January 1st, you should expect the market to be up. People are very excited for the start of the new year. That's just kind of typical start of the new year trading. But for now, it seems do less, trade light, recap your trading year, compare the performance of your accounts to the market. One of the members in Alpha Worlds, Milan, was talking about how his longer term account this year, that dollar cost averages into the SPY, is up 5% when the market is down about 20. And that's, proof of why we like the dollar cost average, regardless of market performance, because we can take advantage of these buys every single week, that we're not just buying right here and our performance is down 20%. We're buying this entire time that we even get, for Milan, he's up 5% when the market's down 20. So it's good for him to see that. This is also a good time for you to review your different accounts and the strategies that you put into those accounts. See which one did better this year, which one did worse. So you know where to allocate more money into the year ahead. Again, for top ideas, there are a few. Again, I got ticked into this WFRD on Friday. Not the most thrilled buying this thing, kind of $2-3 up that day. But again, blue sky breakout, it wants to go. a minute now versus the low a day. The other two names keep an eye on is this O'Reilly up to this 813. I got ticked into some on Friday as well, but I have another order in to add some more versus 800. Again, risking 2%, nothing crazy here. And same with this MTSI, same thing. Coming into support, it shook it out very marginally. I have no problem buying up to 66 versus 64.50, risking about 2%, and just looking to trade this range very simply. If it can get up into the 70, 71, 72, that's kind of the perfect trade in this. And if not, I got a couple bucks, it is what it is. So those are the three names I'm keeping on for this week. Heaven, I'll pass it over to you. Let me go over any of your ideas or any member ideas.
Yeah, Kush's got a couple here. The first one he's looking at, hold on, give me a second here. The first one I believe is ATAT.
And on a side note, Kusha, if you ever post on Twitter a penny stock again, I'm going to kill you.
So this one is a little bit better than a penny stock. I mean, I like that it's a recent IPO, which makes it, a little less reliant on what the overall market is doing. Because I mean, obviously the overall market is in a pretty hard sell-off here over these last 4 days. This one will be less related to it. So I kind of like this idea. Seems like it's trying to pivot from Friday. Just kind of have to keep him. He's looking to buy us through 17. So I'm assuming it's like 17 versus Friday's lows of 16. So you're risking $1, but it's a pretty cheap name. So $1 on these $17 names is still kind of a big chunk. But yeah, I mean, you keep it light, and I see the setup for sure.
Because I'm kidding, but no penny stocks. Any other ones from Kusha?
Yeah. The next one he's looking at is TRMD.
TRMD
through 31.
Yeah, I mean, there's flag after flag after flag. Again, the one thing you want to remember is that every time you see them, the subsequent flag form, your probability starts to decrease a little bit. But again, all-time highs, blue sky breakout. Name has clearly been strong, clearly in an uptrend. Also clearly a crazy ass name when it first came out, but through that 31 verse 30, definitely see what he's looking at there. I just would be cautious because this stuff is always a little scary, but I definitely see the chart there. Definitely worth something.
Next one he's looking at is PCVX. And he's looking to buy this one through 46.50.
Yeah, and so the only sector right now that's really holding up near its resistance that hasn't gotten really smoked has been the biotechs, and this could not be a better, earnings flag that you can ask for. Couldn't ask for much more. Is this blue skies? Let's see.
No, but it's close. I mean, it's getting there. It's solid. Just got to be careful with these biotechs because usually when it has a nice breakout, it'll coincidentally have some sort of news of like failed data research or something. And all of a sudden you get caught in like a 10% gap down. So whenever I trade a biotech, I'm usually pretty quick to at least take the risk off the table, not necessarily take all my profits or anything like that, but be ready to take the risk away. That way, if it does gap down or something, you're still safe. Those are the three from Kusha. Personally, for me, there's not too much on my radar. I'm interested in this Home Depot. Probably not necessarily today, but strong, gapped up. I believe that was like on Tuesday, sold off, came back into this little consolidation area, and then just put in a doji on Friday. Which looks like it could possibly, that could kind of, it's lining up with that downtrend that you just drew out. Looks like possibly could be a bit of a sneaky buyback through that 330 area. Looks pretty decent. I like that one. Another one I'm looking at is this Netflix that tried to go fill the gap last week, or actually did fill the gap from earnings like three earnings ago when it gapped down where that green arrow is. Finally filled that gap and then rejected it. now it's kind of formed on Friday, formed an inside day near the lows of the previous day. It looks like this could have more downside if it breaks that support. So I'm looking for shorts on this one. But if it does hold here, I would look for a support buy back up to that 330 gap fill area. And that's pretty much all I have on my end.
Yeah. So again, the one thing is, again, if the market does find, catch a bit here again, all these breakdowns, you never know what the low is going to be. Everything looks the worst. Again, like right now, it's easy to say, we're going to see a new low because the market just looks horrible, but you get a couple of days where it can flush and start to base, and then maybe this is the new. Need to get rid of all these lines because it's kind of hard to follow. Say the market has to shake this low, it pulls into here, and now this is the new range that we're in. Since there are a lot of these support buybacks, you want to have those on your radar for when that time comes. So if we do get that bounce, you're not flat-footed looking for a bunch of ideas. So like for me, I have these two, this O'Reilly and this MTSI. So if the market does catch a bid and does bounce, these orders are going to trigger me in. I have super tight risk, and I can take off those little singles and doubles very quickly. So you want to just have that list of, if the market does catch a bid, you have those support buybacks ready. And if not, and they had lower, who cares? Like if O'Reilly was to, or the MTSI that I'm not in, if that just continues to roll over today or tomorrow, I don't care, because I'm not going to get triggered in. A couple little things again at the end of the year. We do have only a couple of these guys left. I'm actually very surprised that you guys have supported us enough to sell most. I think we have like 10 of the 100 left. So thank you guys for supporting us with these watches. We do have a few left if anyone still wants one. Once the remaining few that I have left are gone, we're going to start producing the Comma Day 2 watch or the Royal Comma. We're designing 2. And we'll show everyone who ordered the watch those designs once we finish it. And then for anyone who ordered the books, we've figured out a way to make it a little bit more economical. Even though we do credit you guys the books, I am aware that when you see a book for $25, it's very expensive. So I've kind of figured out a way to bring the cost down. So now you can actually buy it directly from us instead of buying it from $20 from Amazon. Hopefully they're not watching this. You can get it from us for $9.99. And same thing, we will credit you the cost, so it still costs you nothing to keep them. But a little, we're just chiseling Amazon on the bid here on all these books.
Yeah, just don't tell Jeff. Don't tell Jeff what we're doing.
Yeah, I think
he'll get pissed.
I think he's
pissed.
Yeah, he'll be okay. So yeah, so again.
Yeah, but Fred's got a question actually. He wanted to know, he wanted to get some views on Tesla and Apple, which I believe were mentioned in the shakedown a little bit. This Tesla is gapping up this morning on some Elon Twitter news, his usual stuff that he does. He put up a poll of should he step down as CEO of Twitter, which the poll basically said that he should step down. So will he follow that? I have no idea, but that's that's basically why it's gapping up a little bit. Will that hold and actually will we see a bounce here? I mean, I don't know, but technical wise, like from the actual chart where it is, it reached that previous flag where it had a massive breakout. So, I mean, from a support standpoint and just avoiding the news completely, like, yes, I think this could be an area where we do see some support and we see some sort of bounce. Does it continue and go back to highs from here? I have no idea. But from a technical standpoint, completely ignoring the stupid news, to me is stupid news. Could see it there.
So Elon is just like probably the best marketer of our lifetime that like we'll ever know. Just to always, other than maybe Kanye, but he does it in a bad way. Elon just always stays relevant in what's, the talking points of the day. So I don't think he's going to step down. I think that's just more him to stay in the news. Chart wise, again, this Tesla in the long term is pretty broken. Short term, again, this is a crazy name. This is also not my wheelhouse. I probably traded Tesla twice in my life, which is not a name that I've really ever gravitated towards. So I will leave it to whatever shakes it up from a short-term standpoint. But long-term, I think Tesla really is going to get smoked, especially with him diverting his attention to Twitter. That kind of pet project, as big of a pet project as it is, you're not focusing as much on this business, and there will be some ramifications for that I don't think is going to really help the share price. For Apple, we also haven't really traded Apple in quite some time. are you for, I'm sorry, who is,
Fred.
Brad, are you, regarding Apple, are you looking to buy this? Are you looking to short this? Is there anything more specific than just what we think of Apple?
Sure.
He wants a short, okay. I don't, I mean, I can see the short. But I don't, it's like shorting America. It's like when you short Apple. So again, Apple is basically a proxy of the SPY. Definitely see this short here, but again, every single one of us is using these phones. So, you know, if he wants to short, you know, so all the tough part is that you're super late now. Like if you short this low support, you're shorting 4 days down. I'd rather be buying here. You're shorting 130, you're shorting 6 day down, and you're just super late. So I think the short, you missed it. Because
At
it
least
looks
for now until it sets up a little better. I think you'll get chopped out of it if you try to take it here.
Yeah.
But from a, you know, if you're looking at it from a stage 1 through 4, this definitely looks like a stage 3 coming into a possible stage 4. And then Val actually pointed that out on Friday. And then I noticed if you look at Amazon's chart, pull up Amazon, it kind of, Apple looks exactly like Amazon did back in like early 2022.
Yeah.
Where, you know, that's exactly where it's at right now. And that stage 4 could be starting. But as you can see, it's not necessarily if you zoom into when it actually broke support, it wasn't exactly a perfect drop down to where it is now, where like it broke support, then it bounced, you know, 20%, or what was that, $20, like 15%. Then came back down again, you try to short again, bounces even higher, now put in a higher high, and you're thinking, okay, well then there's no more short here, and then all of a sudden it drops 50%. So it's definitely not an easy ride, I would say. I think in the short term, Apple's tough to short here. Like you said, 4 days down. I mean, the real out is 30 points higher, 20 points higher. So maybe wait until we see some sort of like tight consolidation in this area, and then we could see the lower move. But
I would just say, just do this, just go, like I'm on my watch list right now. And I'm gonna go to the cheapest names that are down again. So you're trying to short the only stock that is, for the most part, really held up of the really big FANG names this year. And again, does the shoe finally drop? Maybe, but you're fighting the strongest. You're trying to fight Mike Tyson. It's like, just go fight some kid in the gym. Like, go find the biggest loser. And it's so much easier. Like, I'd rather short this X-ray. I didn't look at, this is bottom right, 52-week lows, below pandemic lows. I'd rather short this thing all day long. Short versus 32, short down to 30. I'm risking whatever, 7-8%. I'll probably make much more shorting this name that's already shown it's weak and has no strength to it than trying to fight with it when it's still sure. In 6 months or a year, Apple probably does break this and maybe comes back down to 100, but that's like best case. And you're not gonna, and I'm not saying you, Fred, specifically, most of us are not gonna short 130 and hold an Apple short for 3 months as it comes down to 100, where like this X-ray, you can short this thing down to 30 now versus 32, and it goes back to 20, whatever, 26. That's that same percentage move, and it's much more probable than shorting the stock. I think when you're seeing that stage 3, stage 4 topping pattern develop, it's more of a sign to get out than to start looking to short, because it's still too strong of a leader, and it's going to have those very vicious bounces. Like we looked at Amazon, these were, if you can hold that short against you, you're a madman, and that's just not how we trade. So this is just too hard of a short. Like, this took, what is this, the whole year for this thing to drop barely 50%, where this X-ray is just the first name. This thing is, down huge. And just in this little move here, from 30 to 20, that's that same move. So forget shorting Apple unless it's a really short-term short. I think you're better off just looking for the names that are near 52-week lows, shorting those, and you'll get much more downside follow through, or much more asymmetric risk to the downside shorting the weakest name than trying to short one of the strongest names. that's just my take on it.
Yeah.
All right, so I think we covered that, and okay, cool. All right, guys. Well, again, good luck today. Good luck this week. Again, keep it light, nothing crazy. Try to convert those accounts. If you want to do any financial plan reviews in the beginning of the new year, let me know and I can update your plan for this year for 2023, and we can do that in the new year.
Perfect.
All
See you
right,
guys.
guys.